Good morning. This is your weekly update with Jim Stewart. I'm the Chief Investment Officer here at Orth Asset Management. Today is November 20th, 2023. Last week we got some inflation data and the market soared as the yield started to decline. This week is a shortened week in the market, probably low volume also because we have Thanksgiving on Thursday and a half day on Friday. So let's dive on in and see how the week looks.
Okay, let's go over last week's market recap. U.S. stock indexes climbed for the third week in a row as the S&P 500, NASDAQ, Dow, and world equities all posted total returns of more than 2%. The biggest gain actually was the small caps, which has been down the most. It bounced and surged almost more than 5%. But let's take a look at the equity short-term chart for the S&P 500. A couple weeks ago, we went back to add mode. So we locked in here down only 1.3, and we went ahead and started nibbling and buying back into this market. Let's take a look at the resistance and support zones. Now we're right back into that resistance zone, which we were tapping into just a few weeks ago. But let's zoom out and take a look at how, on a bigger scale, where that is. We've got to still break this one and then get up in the 46, and then the top of this resistance zone is about 46.30. And then the next resistance zone is the all-time high back at, we'll just say 4,800 on the S&P 500. So we still have some work to do. And if we do get the Santa Claus rally, we could possibly break those and then head into the next year at an all-time high. All right, but let's take a look under the surface here. We know that this market's been driven by 7 to 10 stocks. The Magnificent Seven, as they're called, the Apple, NVIDIA, Microsoft, Google, Netflix, etc. But let's take a look at the bond market, the emerging market, small caps, commodities, real estate, and gold. Typically are put in your portfolio to get you a little diversification. Well, they've gone up, down, up, down, up, down, up. They really haven't gone, and this is year to date through 2023. Some of them are negative, some barely up, single digits. Gold actually is the highest of these 6 indexes, up almost 9%. So again, it is not everything that is going up. Underneath the surface, everything's pretty muted, and it's just those 7 to 10 stocks that are driving this market and continue to do so. All right, let's look at the headline and what started this. It was the CPI report. And that came in at the core rate, which excludes food and energy, came in at 4%, and the headline came in at 3.2. However, the real world inflation is higher than what is being reported, just like the jobs numbers that are always revised, and it's a very small sample. So is the inflation data. And how America's feeling the inflation is a lot higher. But again, this is what drove the market. This is what they're reporting. This is what the government's reporting. And actually, their preferred inflation gauge, which is core services ex shelter, actually went up, and now it's at 3.85. So bottom line is the Fed is still going to probably be on the sidelines here, not going to raise interest rates. They're also not going to cut interest rates. They're going to sit here. So anticipate that interest rates are going to be higher for longer. And when that CPI came out last week and it hit 3.2, the 10-year note dropped 20 basis points in 24 hours. That is about a 4.5% move on bonds. And that is a huge move on bonds. And so the bond market is anticipating now with that inflation data that they're going to cut in the near future into 2024. And so that's why the market bounced as much as it did, because they're anticipating cuts heading into next year. All right, so let's take a look at the bond short-term chart in the form of the aggregate bond index. We also, about on the same day, we went also back to add mode on bonds, And so far, so good. The market, the bond market is up there, and we locked in. There's a 3% loss. We went ahead and got in, started nibbling again on the bond side. All right, let's talk about the top 3 market movers for this week. Tuesday, we have the FOMC meeting minutes. So everyone will be looking at any indication of are they going to pause? Are they going to talk about raising cuts, or did they talk about that? And NVIDIA earnings coming out on Tuesday, and that is one of the Magnificent Seven. So they are going to be looking at that, and will that trend continue to drive this market? Friday, we have Black Friday, which is also a half day, and it's going to be extremely low volume. Most people will be out shopping or going online to shop. So we'll get those the following week to see with Cyber Monday and Black Friday to see if retail sales did rebound. And then we have another week of corporate earnings. And as I said, NVIDIA is the big one on Tuesday, but here's a listing of the rest of them. All right, that's it for this week. Thank you for joining us. Our next update is Monday, November 27th. As always, continue to subscribe, like, and follow, and we shall see you next week. Have a great week trading.